A choice owners or founders of a business must make is which type of entity or organization to operate their business. Popular choices include sole proprietorship, partnership, LLC, and corporations. Today I'm going to talk a bit more about LLC, the limited liability company type of entity. Before I get into it though, I want to tell you a little history. Partnerships and corporations are very old business structures, business entities. They've existed for centuries. In contrast, the LLC was first created in the state of Wyoming in 1977. So recall that entities, the formation and governance, is controlled by state law. Thus, Wyoming was able to create this new type of entity and allow that for people who formed their businesses under the laws of Wyoming. It was slow to spread, but did gain popularity and momentum, especially by 2000s, and we now have the LLC type of business available in all states. So what are the characteristics of the LLC? When someone is deciding what type of business to choose, there are four broad categories they consider. First is formation. Are there complexities attached with this? Will they need to hire accountants and lawyers? Or is it a simple formation? Next, they think about taxation. Then, liability. Will owners be liable for the debts of the business? And lastly, management. I said that LLCs are a relatively new type of entity, but since they have been established in multiple states and they have grown in popularity, and LLCs are very common, the LLC takes good features from partnership and good features from corporation status and marries it together. What do I mean? First of all, let's look at formation. Both the LLC and the corporation require filing of certain founding documents, with the LLC called Articles of Organization and with the corporation called Articles of Incorporation, with the Secretary of State or some other office in the state under whose laws the entity is being organized. And so they both require filing with a Secretary of State or state official. How about tax? Tax is where we start to see some of the benefit of the LLC. A partnership is a pass-through entity, which means that the partnership itself, the business, the entity, does not pay income tax. The income is said to pass through the partnership to the owners, and the owners report the income on their individual income tax returns. So the income of the partnership is taxed once, not at the partnership level, but later at the owner level. In contrast, corporations, the business itself, does pay income tax. And so if a corporation has income, they must pay tax on it. And then if the income received is distributed as a dividend payment to shareholders, who are the owners, they must pay tax. Thus, some income of a corporation is taxed twice or has double taxation. Tax is paid at the corporate level and also at the owner shareholder level. LLCs are taxed like partnerships. That means the LLC, the business, does not pay income tax. Instead, the owners pay the income tax. So it's only taxed once. Income is taxed once. Next, we have liability. Are owners liable for debts of the entity? Under general partnership law, owners, the partners, are liable for debts of the partnership. Thus, if the partnership defaults on a loan, the lender may pursue rights against the owners, and they must pay out of their personal resources. Corporations shield owners. They have limited liability, and thus the corporate owners, the shareholders, are not responsible for debts which the corporation is not able to pay. So that is a benefit, and that is a feature of an LLC. LLC owners, called members, have limited liability with regard to debts of the business. Lastly, let's talk about management. In partnerships, there are some limited forms of partnership where the owners have some types of limited liability. And in those settings, There are restrictions often on management, how much a limited liability partner may manage the entity. In a corporation, owners can be managers. They can run the operations. Similarly, an LLC has that feature. Owners, again called members, may manage the business without losing their protection from the liabilities of the LLC. Thus, you can see that the LLC takes the best features of the partnership, that pass-through taxation, and adds it to the best features of the corporation, limited liability for owners, and also ease of management for owners, marries those together, and that's why it has become so popular in recent years.